With unemployment still well above its longer-run normal rate, which committee participants currently estimate to be between 5.2 and 5.8%, and with inflation continuing to run below the committee's 2% longer-term objective, highly accommodative monetary policy remains appropriate.
Wall Street reacted to the start of Fed tapering by rising and not falling, like some in the market had been tipping. Record levels, in fact, for the Dow and the S&P 500. Let's bring up the boards and look at those closing levels. The Dow, 16,167, up by almost 2%. The S&P 500 up by 1.7%, 1,810, and the Nasdaq also gaining by more than 1%. So the question is, are US markets finally strong enough to return to normal transmission? I'm not sure I know what normal transmission is anymore. Maybe Dorland can help us. Chairman and Chief Investment Officer at Landor and Quest Capital Managers, joining us live from New York. Is there a state of normal out there in the markets right now?
There hasn't been normal for a long while. There isn't normal, but we can see normal coming back into the market where fundamental and economic valuations are more important than low interest rates. But it's going to be a while, Oriel, and the market's very happy with continuing to have the valuation based on low interest rates.
Dodge, has anything changed for you, given that we did have that taper from the Fed last night?
Yes. Yes, Oriel. And by the way, I have to hand it to you and Adam. You both got it right some time ago, and it's come to pass. We'd had some short positions as a hedge against our long. We were 90% long. We took the hedges off. We're completely long now. We suspect the market will run into a little bit of resistance, about 5 points up on the S&P. But from now to the end of the year, there is very little reason to be on the short side, and those who are on are going to have a hard time fighting the trend. And the trend right now is to the upside.
Dodge, thank you very much. Adam and I were just talking about our bragging rights and how we're not afraid to use them at this point anyway. Look, on those valuations, on that front, we've talked before about the question that some of the markets are asking about whether US stocks are overvalued at the moment, whether they're overvalued already. Now, if we're going to see the market continue to run up in the way it's been hitting new record highs, then are we not going to risk those valuations becoming too high and earnings just not being able to keep up?
They are overvalued if you value the market on economic and fundamentals. But right now, the market's not. It's low interest rates. Low interest rates are going to stay for a very long period of time, really low interest rates. And so it will give time for market fundamentals, economic fundamentals to come back and the valuation to catch up to the economic and fundamental valuation to catch up to the valuation that we have now. Basically, the low interest rates that we've had have allowed us to pass through the valley of the usual pullback or bear market. And so we suspect that the bull market that we're in will continue for an extended period of time. And we won't have to worry about the valuation converting at least for another 6 to 9 months.
Dodge, I take it that's why you're advocating to be short the VIX index, and some may argue there's been a certain degree of complacency when you look at that index and judging, of course, of fear out there in the market, but that if we do see spikes, that should be a warning signal. But what could be the possible trigger for that?
We don't see anything over the next month or two, but inflation may come back. It's not on the horizon right now. It's so low. The other thing is we need to watch employment. If employment participation, not just employment, but participation. If we see that employment starts to pick up faster than we expect it to, then there may be more of a reason to increase the amount of tapering that is occurring. But we don't see that over the next 2 to 3 months. We suspect that right now, although the market is overvalued, Adam, if you look at it from a fundamental point of view, that's not the way the market's being valued.
Okay, let's get to some of your stock plays. You do like Goldman Sachs. You know, Deutsche Bank came out with a report a few weeks ago, in fact 2 weeks ago, and downgraded many banks because they said the fear of tapering is going to actually hit banks that are leveraged to the capital markets. Does that thesis work in your books?
Well, they were right at the time because the prospect of tapering was much more significant. But the way the Fed is initiating it now, is talking about it now, and doing it in very small steps, even on both sides, it is less likely that the banks are going to be hit as hard as what was expected. And given the fact that the banks have now low interest rates in the near term future, for example, they're going to be able, the commercial banks will start to lend to some of the smaller cap companies, which is good for employment. Goldman Sachs has the ability, has the long-term demonstrated capability of understanding the environment and taking advantage of whatever is presented. So we suspect that Goldman Sachs will continue. It's had a very strong uptrend, and we expect it to continue for some time.
Dodge, we've been talking about growing strength in the U.S. economy as a whole, but, you know, there's still some cautiousness when it comes to retail, but I notice that one of the plays that you like the most in the U.S. market is actually a retailer. In fact, you've got a couple, Michael Kors and also MasterCard.
Yes, well, Michael Kors is interesting because they're bringing in-house their online capabilities, so their profit margins will increase. They can expand their actual stores internationally, not just here in the United States. So they have the ability. And we're looking at retail not from the consumer point of view, because the consumer really has not been affected as much by tapering. And so it's not the consumer side of retail that we're watching. We're actually looking at the stores. Now, MasterCard and Visa both are performing well because the lower interest rates are going to continue. So we expect them to continue to benefit from that scenario.
Okay. All right, Dodge, we're out of time. You have a fantastic holiday season, and we do look forward to catching up again in the new year.